This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. Energy Secretary Chris Wright said on Monday he was planning to work with Congress on canceling previously mandated sales from the Strategic Petroleum Reserve as one way to address low stockpiles. Congress has mandated some 100 million barrels in sales from the reserve, the world's largest emergency stockpile of crude oil, with a 7 million barrel sale set for fiscal year 2026-2027, and further sales through 2031. It would take 5 to 7 years and $20 billion to refill the reserve, Wright said. U.S. President Donald Trump's predecessor Joe Biden sold nearly 300 million barrels from the SPR, including its largest sale ever after Russia invaded Ukraine in 2022.
Fatih Birol, the director of the Paris-based International Energy Agency, said on Monday there is a need for investment in oil and gas fields to support global energy security. The comment puts the energy watchdog for industrialized nations more in line with President Donald Trump's pro-drilling agenda, after it came under pressure from fossil fuel advocates years ago for proposing an end to new oil and gas projects. "I want to make it clear, there would be a need for investment, especially to address the decline in the existing fields," he said at the CERAWeek Energy Conference in Houston. "There is a need for oil and gas upstream investments, full stop," he said.
Moving on to the top news in the energy sector.
Indonesia will build oil refineries on several of its islands, including Kalimantan and Sulawesi, with a total capacity of 1 million barrel per day, upgrading from a planned single refinery with a 500,000 barrels of oil per day capacity, the energy minister said. Last week, the government said it wanted to accelerate 21 natural resource processing projects worth $40 billion, including several coal gasification projects, building oil storage and expanding its oil refining capacity. Minister Bahlil Lahadalia said late on Monday, after a meeting with President Prabowo Subianto, that the planned capacity for the new refineries would be doubled to 1 million barrel of oil per day. He said Indonesia currently imports around 1 million barrel of oil per day of crude oil and fuel to meet domestic demand.
Several U.S. LNG producers are trying to renegotiate higher prices with buyers as a result of rising construction, labor and borrowing costs, according to sources and company statements reviewed by Reuters. Higher prices would eat into the competitive advantage of U.S. liquefied natural gas on the global market, at a time U.S. President Donald Trump is seeking to expand the industry, already the world's largest. The competitiveness of U.S. LNG could face a double whammy, said Alex Munton, director of global gas and LNG research at consulting firm Rapidan Energy Group. Next, we have the top news in metal markets. U.S. President Donald Trump aims to build metals refining facilities on Pentagon military bases as part of his plan to boost domestic production of critical minerals and offset China's control of the sector, two senior administration officials told Reuters. The move is one of several planned for an executive order Trump could sign as soon as Wednesday after he told the U.S. Congress last week he would take historic action to dramatically expand production of critical minerals and rare earths here in the USA. As part of the order, the Pentagon would work with other federal agencies to install processing facilities on its bases, according to the sources, who were not authorized to publicly discuss the administration's deliberations.
Prices of Singapore iron ore futures rose on Tuesday, driven by expectations of increased demand as steelmakers in the northern region of China, the top consumer, are set to resume production following the conclusion of its annual parliament meeting. However, gains were capped by concerns over demand, with a potential steel output cut in China this year and escalating global trade friction stirred by the latest tariffs by the U.S. President Donald Trump. The benchmark April iron ore on the Singapore exchange climbed 0.76% to $100.65 a metric ton, as of 0321 GMT, after touching the lowest level since January 14 at $98.85 a ton earlier in the session.
We will now look at the top news in the agricultural sector.
Chicago soybeans slid for a third consecutive session on Tuesday, with prices dropping to their lowest in almost 1 week amid ample Brazilian supplies and worries over demand in top importer China. Wheat and corn also fell, weighed down by a broad-based decline in stock markets. In the physical market, there are plenty of soybeans in South America, which will give competition to US beans, said one grains trader in Singapore. On top of that, we could see a slowdown in Chinese demand.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.